Hi friends, welcome to Crack Grade B. We are back with yet another important lecture on the current affairs series that we are doing for you. So this is the current affairs from April to 11 to 20th April 2022. So as you all know that we have separated PIB and the current affair. So this is the news related to the current affairs. So let's begin with the first piece of information. So first piece of news is related to compliance function and role of Chief Compliance Officers NBFC. Now, what is important to note here is, right? So a few months back you have read that RBI has asked NBFC upper level and NBFC middle level to appoint a Chief Compliance Officer, right? So now what this new role will do, right? So answer to this question is there in this guideline. So RBI has given the guidelines for the role of Chief Compliance Officer in the NBFC upper level and the NBFC middle level, first thing, and the compliance function, means how would that department function as a whole. I hope this is clear, right? So important thing again to note here is from the MCQ perspective that the compliance function, right, the guideline is to be effective from 1st of April. Okay. The second thing is Chief Compliance Officer. See, this RBI has given few time is because NBFC would require to find the suitable candidate, right? It's not in a small job, it's a big responsibility. The entire compliance will be will be given to that particular person, whosoever is recruited as the Chief Compliance Officer in that UL, means upper level or the middle level NBFC. So this is effective from 1st of October 2023. So meanwhile what NBFC will do, they will come out with a notification and they will try to fill the position before this, and they will have to fill it. Remember, this is not applicable to all the NBFCs. This is applicable to only NBFC upper level and middle level. But if you remember in the last guideline, RBI has said that mandatory for UL and ML, but if other NBFC wants, they can do it. So probably in future, may not be in the short term, in the long term, maybe down the line 3 years, 5 years, one or the other day RBI will come up for everyone, right? But that's not the point of discussion in this particular lecture. So we would only see for NBFC UL and ML, right? So now why? See, first question you have to ask yourself, why? As a part of the overall structure of corporate governance, compliance function serves a critical role. Accordingly, it has been decided to introduce certain principles, standard and procedures for compliance function in NBFC UL and ML. Right? So this is regarding the corporate governance, means effective management of the company, so that nothing is missed out. The compliance, right? Compliance of what? Compliance of guidelines. Compliance of commitment towards that are made to the NBFC clients, and so on. Then who would be at the nodal point of contact? It would be the Chief Compliance Officer would be at the nodal point of contact, right? And this particular person, whosoever, he or she should not be given with any other responsibility. So that person will particularly responsible for the compliance function of the NBFC, nothing else. Then what should NBFC do? If you read this, so the CEO will be appointed for a period of at least 3-year tenure and should be a senior executive on the NBFC with a position not below 2 level from the CEO. So structure is also defined. Let's say this is the CEO. Okay, maybe under CEO there would be, let us hypothetically create some situation. Maybe MD, and under this position, this COO, means any of this position, this CEO would be appointed. Not more than 2 position below, means not in this position, somewhere around this. Okay, means there should be only one boss between the CEO and the COO, Chief Compliance Officer. Okay, so let's move to the next. So what is compliance risk? So compliance risk is the risks of legal or regulatory sanctions, right? Legal, so that we have already discussed. So but if you want, you can read it through. So as you all know, in the current affair material, you will find everything that is, related to static part. Then Basel III framework on liquidity standard, liquidity coverage ratio, LCR, right? So what's the issue? RBI has made some changes in the LCR. Let's see what it is. It is applicable when? It is applicable as soon as the guidelines came, means immediate. Then this is applicable to whom? The circular is applicable to commercial banks and other than regional rural bank, local area bank and payment bank, right? Then what are the key highlights? In terms of circular, the asset allowed as the level 1 high quality liquid assets HQLA for the purpose of computing the LCR inter alia includes. What are this includes? This includes government security in excess of the mandatory SLR requirement. So let's say in SLR, the bank has kept 1 lakh crore. 1 lakh crore. So whatever is beyond, 1 lakh crore would be considered under the level 1 high quality liquid asset, right? Then within the mandatory SLR requirement, government security to the extent under now over the SLR quota, it's the HQLA, high quality asset, right? But within the ambit of SLR also, it's the, there are few the HQLA. What are those? Marginal standing facility and facility to avail liquidity for liquidity coverage ratio, 15% of the bank's NDTL, net demand and time liability. So I hope you know what NDTL is, right? So now what are the changes? Changes are, since MSF has been reduced to 2% from 3% of NDTL from January 1, 2022. So very important point to note, right? You may get an MCQ. The total HQLA carved out from the mandatory SLR, which will be reckoned for meeting of LCR requirement, had been reduced to 17% of NDTL, that is 2% of MSF plus 15% of FALCR, right? So from this line it is coming 2% of MSF and 15% of FAL, facility to avail liquidity for liquidity coverage ratio, from 18%. So two things to note, right? From 2% to 3%, it happened when? Means MSF happened when? January 1, 2022. And since this happened, the RBI is making the changes here. Why? Because this MSF, adds up to the HQLA, right? That we have already seen. So from 18%, it had been reduced to 17%, right? So, and the breakup of 17% is 2% of MSF and 15% of FALCRR, right? Now, on a review, it has been decided to permit banks to reckon government securities as level 1 HQLA under FALCRR within the mandatory SLR requirement up to 16% of their NDTL, right? So it's completely clear here. Accordingly, the total HQLA carved out from the mandatory SLR, which can be reckoned for meeting LCR requirement, will be 18% of NDTL, 2% of 2% MSF and 16% FALCR, right? Now, what is liquidity coverage ratio? So if you go through this, you will understand what liquidity coverage ratio is. But yes, see, everything we cannot put in this content, right? But let's say, you just want to know what LCR is. Just go through it, you will understand. But if you want to read in depth about it, obviously you will have to refer our finance material, right? Where you will find it. So it's not possible to put the entire topic in the current affairs. So current affair can give you only a part to revise. For example, you forgot things, you will read, you will call everything, right? But if you want in-depth coverage, then I would say you will have to go to our finance material, right? Then scale-based regulation for NBFC. Next piece of news. Now, what is scale-based regulation? Look, NBFC are divided into multiple levels that we have seen. Now, RBI has issued some guidelines regarding the scale-based NBFC. Now, let's see what are they. The changes made to the October 2021 circular titled Scale-Based Regulation SBR, a revised regulatory framework for NBFC, in terms of which a large exposure framework is prescribed for the NBFCs in upper layer, right? So this is applicable to whom? The mentioned guidelines are applicable to NBFC UL, means upper level, both at the solo level and at the consolidated group level. Means there can be, for example, I don't remember exactly the name, but yes, there are few banks, who there are NBFC of the banks as well. So they finance, let's say, infrastructure, they finance, the consumer durables. So that is what they do, right? Now, also exposure will comprise both on and off balance sheet exposure by NBFC UL. So this is applicable from 1st of October 2022. Remember it. Now, key highlights. Tier 1 capital for the purpose of guideline has the same defined in Circular 2021 circular. So look, now, when this thing is there, so it is your responsibility to open the October's current affair material and find this piece of news, right? But yes, even if you don't do it, things are already here. Then, because this is coming from the static part of the division of NBFC into multiple, levels. Then, RBI directs those profits occurred during the year reckoned as Tier 1 capital for the purpose of LEF after making necessary adjustment as per the guidelines applicable to NBFC UL. Right? So, when you go through it, you would understand. Now, next is large exposure framework for the upper layer NBFCs. Okay, so multiple framework came for the NBFC. So you will have to read everything related to it, because you never know, since this is discussed almost in every piece of news in during this month, then this becomes important. Now, RBI unveils large exposure framework for upper level NBFC. Now, this is applicable only to whom? NBFC UL, right? Now, what is the changes? The sum of all exposure values of the NBFC placed in the upper layer to a single counterparty or a group connected to the counterparty must not be 20% and 25% respectively. It's available eligible base at all times according to Reserve Bank of India. So let us understand what it is. Single counterparty to a group or connected counterparties, right? For example, let's say a bridge is being built, right? So there are multiple companies involved. So one would provide the raw material, the other would provide the the cements, the other would provide the capital goods. For example, the capital let me not use capital word here. Those JCB machine means earth mover machines, right? So all those things. Now let's say everyone is taking money from this NBFC, so that becomes the group connected counterparties. And if that is single counterparty, so I hope that's clear, right? Now, must not be, so for single it's 20%, for group it's 25% of the overall amount. Now, but what RBI has again said is, however, an infrastructure finance company which is classified as an NBFC UL can exceed the aforesaid limits by 5% of its Tier 1 capital. Now, let me tell you the reason for keeping, for giving extra edge to the infrastructure finance company. It's because they finance very big projects, in 1,000 crores. So that is what they do. Now let's move further and let's see. So for infrastructure finance company, it's 5% above the quota that we have seen above, right? Let's move to the next news article, that is issue and regulation of share capital and securities. Now, RBI allows cooperative banks to raise fund through new instruments, right? Now, this is applicable to whom? RBI allows cooperative banks to raise fund through new instruments. Applicable to state and central cooperative bank. Applicable from immediate. Under which section? So this is one of the important thing, because at least in 2 RBI examination directly section was asked, right? So you can't ignore this. So the extent of instruction for RCBs on the issue and regulation of capital funds have been reviewed, keeping in view inter alia the provision of section 12 read with section 56 of the amended Banking Regulation Act 1949. So it's section 12 with 56. Very important point to note here. Then now what they are given the permission? The cooperative banks are permitted to raise share capital by way of issue of share to the person within area of operation in accordance with the provision of their bylaws. Issue of additional share to the existing members. Okay, and they are also permitted to issue the following instruments, right? The preferential shares, under preferential shares, all this, under debt instrument, all these things, right? So initially they were not allowed, now they are allowed. Then the timing change. Okay, so consider this as the only, it may ask the time in the phase 1 only, right? So RBI restores pre-COVID timing of the financial markets effective April 18. So financial market regulated by RBI. So the new time is from 9 AM to 3:30 PM. This is effective from April 18, right? Most important thing to remember. Then SEBI new guidelines to evaluate risk value of gold. SEBI came out with a new guideline that is related to risk value of gold. Now, what it is? That it has been decided that investment in such commodities, means gold and related instrument, by the mutual fund scheme will be assigned a risk score corresponding to the annualized volatility of the price of such commodity. For example, when you buy gold at, let's say, 55,000, even if you believe that gold is a safe asset, absolutely gold is a very safe asset, eventually this gold price is very volatile, is because when the market is going down, people move money from the equity to some safer investment like gold, right? So when again theory of demand and supply will work into its play, when more people will reach out to buy gold, the price will increase. So for example, you as a retail investor, you bought it at 55,000 per 10 gram. So what is going to happen, right? Let's say the short term volatility created is solved. Let us take the example of Russia-Ukraine war. It is solved. Again, it will come to 48 to 45 level in the short term. So you are at loss. So what SEBI says is, so gold, even if it's the safe investment, the mutual fund houses will assign the risk score corresponding to the annualized volatility of the price of such commodity. Gold is also included in that, right? So I hope this is clear. Now let's move to the next news article, that is finances news, CPI and WPI data March 2022. Okay, so the retail inflation rises to 6.95 in March, means this is above the tolerance level of the RBI. Now wholesale inflation is also high, second highest since March, right? So you go through this, you will understand what has led. What has led is because of edible oils, vegetables, meat and fish. So why edible oils? I'll tell you one thing. Ukraine was the biggest supplier of soybean seed, right? Not the oil. So using those soybean seed, everyone could extract the oil. Since there is a war, the supply is badly hit or even it stopped. And Russia was one of the supplier of sunflower oil. Okay, so there also it was hit. Now, so eventually the demand for palm will go up, and palm oil is very costly from Malaysia and Indonesia. So that's why edible oil is one of the factor for the rise in CPI. Okay, so as you see in the March, the wholesale price index is on the double digits, that is 14.55, right? So let us understand one thing. What is wholesale price index and consumer price index? So consumer price index is the price at the consumer side. Matlab, if you go to the market and buy something, right? Let's say Parle-G, which cost you 5 rupees. So suddenly that started to cost the 6 rupees. Okay, so this increase of 1 rupees we can define it as the inflation from the consumer perspective, means consumer price index will go up. But what if the price increases only in the wholesale market and not in the retail market? It happens, right? So many a time manufacturers, they will accommodate some losses, or you can say they will reduce their revenue, and they will try to keep the price stable. And if the price increase for them, then we can say that then we can say that price on the wholesale market has increased. So you see, wholesale price market it's 14.55 and retail price it's 6.95. So somewhere the other way, you see this 8 to 9% difference, this would align. Why this would align? Obviously, till how long the manufacturer would accommodate their revenue dent or revenue loss, you can say. Okay, so this tends to align. And also there are multiple concepts to it which we are not going to discuss in the current affair, but yes, if you want, please do let us know in the comment section so that we can come out with a video where we would explain how this percentage and this percent is tend to align. So let's move further. So State Energy and Climate Index round 1. So this is a report released by whom? Niti Aayog. This is the first index that aims to track the effort made by the states, union territories in climate and energy sector. Okay, so what is the overview and objective? The overview is, if you go through it, you would understand the it ranks on this 6 parameters. What are those? Discoms, access affordability, clean energy, energy efficiency, environment sustainability, new initiatives. Okay, what are the key highlights? Key highlights are the states and union territories has been categorized into three parts: achievers, front runners, and aspirants. And there are 27 indicators as well. So let us not get into all those things. But remember, these are the 6 broad parameters. But again, if you subdivide them, the subdivision is of 27 indicators, right? Now, let's move forward and let's see the performer. So the top performer among the larger state, it's the Gujarat, Kerala, and Punjab. Okay, 1, 2, 3. The top performer among the smaller state, it's Goa, Tripura, third is Manipur. If you see top performers among UT, number 1 Chandigarh, number 2 Delhi, number 3 Daman and Diu. Unsatisfactory performance among the larger states. So unsatisfactory is also there. Okay, it's Madhya Pradesh is at number 1, Chhattisgarh at number 2, Jharkhand is at number 3. Okay, so let's move forward and let's see women, business and law. So this is a report or a study, you can say, given by whom? None other than the World Bank. Okay, so the ranking that it has given is the basis on the legal reforms of this 8 counts: mobility, workplace, pay, marriage, parenthood, entrepreneurship, assets and pension. Right, so it is very important to note that the overall score of India is 74.4 out of 100 in the 3 years. So this is the data from October 2, 2020 to October 1, 2021. Okay, now it is very important for you to know all these points. For example, despite India maintaining a consistent performance on gender equality, its rank in the area in legal terms has declined to 124 among 90 countries as against 123rd a year ago. 117 in 2020 according to an index compiled by a World Bank study. Now, India got the lowest. How much? 25% in pay in each year of the 3 years, followed by 40% in the parenthood. Its score in entrepreneurship and pension was the 75% in each of these 3 years, while in asset it was 80%. It received 100% in mobility, workplace and marriage. Right? I hope this is clear. Then, international position. So what is the international position? So go through it, you would understand. So very important point here is to that 100% on mobility, workplace and marriage. So out of this 8, this mobility, workplace and marriage, India has scored how much? 100 out of 100. Okay, very important point for you to remember. Now SBI Advisor Report given by State Bank of India, it simply tells or highlights that the freebies that the state governments are offering, free electricity, free metro ride, free bus, then probably the free electricity up to some units and multiple things. So all these free things is not good for the economy, completely not good. Stakes next to reset spending, cut freebies, SBI Advisor Report. So State Bank of India said this, right? So you can go through it, so you will understand all the concept, all the background story of it. Now World Bank paper on poverty. Okay, so this is a paper given by the economist Shruti Sinha Roy, and Roy won the wage. Okay, so extreme poverty in India fell sharply in 2011-12, a World Bank paper has said. So now this is a private paper. Obviously it's published by the World Bank, but the authors are, the name is here. So obviously you should know the name, and when you go through it, you will understand. So just go through it, 2 to 3 times, that would be enough, because this I don't think any MCQ can be made, but you never know, they can give you an MCQ as well. And when you read this at least 3 times, what you will have in your mind is a broad basis of a topic related to poverty. So I know poverty, right? Of its poverty in its static form. What is poverty? What are the types of poverty, right? So everything you know. But when you read this kind of things, then when you start to write a descriptive answer, you have not a general view of the topic or the question. You will have a broad view since you have read all these papers. So all the important points we have picked up from the paper and is given here. So you just go through it and you can read. Now you see the World Bank, the World Bank static part is also there, which you can read. Now with this we are into the last one, that is global trade. So global trade data is given by whom? WTO. So WTO has reduced the forecast to 3% from how much? From 4.7%. Very important point. Okay. Now why? The reason, just go through it 2 times, it would be more than enough. Okay. So let's move forward. And Nepal bans import, right? Again, this is for the overview, so go through it, you will understand. Okay, South Asia economic focus. This is a report by the World Bank. This is a biannual report, right? So what it said, it lowered India's growth to 8% from the previous estimate of 8.7%, right? So why lowered India? The reasons are here, especially the war, and you can say the import bills because of rise in oil price in the international market. Then women related finding. The findings are women facing disadvantage in accessing economic opportunities, right? Especially the rural women. Then labor force participation. Obviously labor force participation, maybe in the city it's fine, but in the tier 2 and the tier 3 city it's completely drastic when you compare the data of labor force participation from, let's say, a village or tier 3 city to a tier 1 city. Then conservative belief. Okay, conservative belief of whose? The societal beliefs, right? घर की बहू है, क्यों काम करेगी, and something like that. And that is the reason you would see, even if the a woman is, good enough to do a very good job, good enough in the sense like, literate enough, but they're not doing because of the conservative belief. Okay, there is a small baby, you will have to look after them, the household things, so you don't work. So that's the conservative belief or the societal belief that is letting, or that is acting as a disadvantages for them. Now, Global Wind Energy Report. This is given by whom? Global Wind Energy Council, GWEC, right? So it says wind energy installation must 4 times. So whatever it's the present, it should multiply its 4 times every year. Why? Because India has to meet a target in 2030 and in 2070, right? Then if you read the assessment, you will understand everything. So now, MOU between SEBI and FRC. So FRC is financial regulator for the Mongolia, right? So the why it has been signed? It has been signed to strengthen the information sharing framework leading to effective enforcement of security law and also help in establishing a technical assistance program, right? So with this we have, okay, so there is also an Oxfam report, right? So Oxfam report is related to what? Is related to poverty, right? So it says that more than a quarter of billion people in 2022 will be pushed into poverty, and one simple reason is because of the war. Obviously war is not just about blood and death, it is beyond that. The effects of war is so much that the Russia and Ukraine is fighting. Even we see in India the impact, not the diplomatic impact, the impact on us, right? The oil prices are high. The oil, I mean the petroleum products, the oil which I said was the the oil, vegetable oil or the sunflower oil or the mustard oil that we use for our household cooking purpose. So eventually the cost of food has gone high. So that is the crisis of a war. So with this we have come to the end of this lecture. So as you all know that we do not discuss one-liner, but absolutely that doesn't mean that one-liner is not important. One-liner are equally important as we have put all other news, right? So let's meet in other lecture. Goodbye.